Well, I'm delighted today to be speaking to Amol Prabhu, who's the CEO of Barclays in South Africa and market head for Africa. Welcome, Amol.
Thank you, David, and thank you for having me.
So terrific to be here at your offices in Johannesburg. We're going to talk about the latest trends from your business and what you see in the private wealth sector. But first of all, it'd be great to hear a little bit more about your background.
Sure. Well, first of all, thank you for asking me along.
Pleasure.
And also a shout out to you and the PCD more generally. It's been great to meet you over the years and the great work that you've done. So well done to you on founding that. For myself personally, I've been with the bank for nearly 20 years now. Started my career in the investment bank, worked across London, Hong Kong, Dubai, but I spent the last 3 years here in Johannesburg. Was the first employee post the ABSA separation for Barclays and really have grown the franchise from the ground up. Always have focused on emerging markets. It's in my DNA, it's what I do. And for the last 10 years or so, have very much focused on Africa. It's been an incredible journey, love the continent. And you know, Barclays itself has been here supporting clients for over 100 years. So I see myself as the kind of next chapter in that 100 years plus story.
Fantastic. Does your corporate investment banking background, you think, give you a different kind of conversation you can have with business owners in a private banking context, or just open you up to different styles of conversation?
It does. It's a good question because we have so the way we look at our business is holistic. So first of all, if I was to break it down. Initially, I actually came down with corporate investment banking. I then pivoted and spent, but as CEO, I look at everything. I'm responsible for everything. But I pivot my time with respect to where is the greatest need. And the greatest need at the moment is building up our private banking practice, which is super exciting. Also, in terms of where we do what, so obviously we have the office here in South Africa. We've actually already outgrown the office, so we're looking for other premises at the same time. And obviously we focus very much on Nigeria, we focus on Kenya. So there are different parts of the continent, mainly Anglophone countries, where the brand is very powerful. The stories I hear from clients around, been with Barclays 40, 50 years, so it's very positive that way. But to answer your question, in all those countries, we don't focus on one business. We focus on our multiple businesses, which are private banking, investment banking, and corporate banking. And the logic behind it is actually pretty simple, which is, if I start on the private bank side, if you meet an individual who's an ultra high net worth client or ultra high net worth family, more broadly, generally it could be a family business, or it could be, or they work in a public company, but they're generally the chairman, the CEO, the CFO. And the point then is, if they're comfortable to bank with Barclays in a private banking context, they should be comfortable with banking them in a corporate investment banking context. And with many of these families that we see, particularly where they've been generation after generation have been building their businesses, they get to a point where actually they require corporate investment banking solutions. It could be strategic private placements where they want to raise 100 million. It could be strategic M&A where they want to buy out a competitor. It could be that they want to go public and list on the London Stock Exchange. So all these things, being able to bring a client within the Barclays ecosystem and then provide them with the full service that the bank provides, cross-business, cross-country and continents, and we're obviously all over the globe pretty much. So it's a very, very powerful proposition.
So you're there as a partner all the way. So within the private bank, the liquidity event is part of that story, perhaps at the end. But you've got so much more value to add on that journey, isn't it, to take the client to that point?
Absolutely right, and it also gets very interesting where I think we obviously have very, very deep expertise, not just from a Africa coverage perspective, and I should say globally we've got 100 plus people focused on Africa, and at least 30, 40 of them are within the private bank in some shape or form. So we've got a very strong focus and presence, partly on the continent and partly in places like London, Dubai, Switzerland, etc. So there is a wide spread of expertise, but on top of that, we do have sector expertise particularly. So, and we had this actually a couple of weeks ago where we have a family that's very focused on cement. Now we have a head of cement sitting in London who all he's done for 40 years is know about cement businesses. And so obviously we bring him in, he speaks to this family who know cement themselves, and they talk a different language for about an hour about all these different companies and what's happening, how do they bench against the global peers. So it's providing real value add to clients. And again, this is not by accident. When I was building this business initially, I was extremely thoughtful around our strategy. The strategy around the countries we look to operate in, the strategy around the businesses that we do. But the most important and the real killer question, which I often ask our bankers from our different businesses, is why would that client choose Barclays? What value add are you really bringing to the table? If you look at South Africa, if you look at Kenya, you look at Nigeria, all those markets have got a lot of banks, local banks, international banks, etc. So what is the difference that Barclays brings? And it's important to be able to know where you can add value. I would also emphasize, we do not do everything for everyone everywhere. We're very focused on what we do. We don't do local business. So what I call local. The local currencies, listing on local exchanges. There are other institutions that do it quicker, cheaper, and better, frankly, than we do. But if you're looking for corridors into the UK, if you're looking for corridors and networks across Africa, into Dubai, into India, into Asia, we're the bank for you because we're in all those places. We provide an incredible amount of support to our clients. Global families can be in all those different places as well, so we can cover them locally and holistically. So it's a very powerful proposition. It's hard work, I won't lie to you. It's hard work to get it right, but when you do get it right, you see real value for clients.
And global families often have investments, business interests, real estate in centres like London, which is obviously home turf for Barclays and a strong suit. You were recently in London with part of the South African delegation. Perhaps you'd tell us a little bit more about what you saw on your trip to London and what you think of the ties between the UK and South Africa for business.
Yeah, look, I think there are huge ties. So, and I think there's a lot more to do. So that's the other point I would make. So I think in terms of the ties generally, I mean, even on a personal level, many South Africans themselves have studied, worked, lived in the UK in some shape or form. Many have strong aspirations for their children to do the same. So you see that generational connectivity in terms of between South Africa and the UK. And I could say that of Kenya and Nigeria as well. It's very much the same, where there is a strong pull. I think linked to that, and that's obviously sometimes an educational pull, linked to that obviously is real estate, as you've mentioned. I mean, I heard a stat the other day that I think we do out of the prime and super prime, Barclays does 50% of the mortgages. So, and these are, it's our home market. We've been there for 300 odd years. So I
guess with interest rates going up and the global picture becoming more complicated, many of those families will be looking at arrangements and actually looking at thinking how well priced is the debt we have, or what are our options?
They do, and also I think also because we do so many mortgages, we can price very, very competitively. We can give you multiple options around 3, 5, 7, 10-year. Tracker, fixed, half, the permutations and the combinations are all there. Linked to that then is obviously many of our clients obviously focus on London, but they can also have regional, if they've got their child studying in Leeds or Manchester or Cambridge or whatever it is, we do mortgages there as well, and we help clients out there. We also bank their children while they're there studying. So there's a multi-generational play, deep connectivity. We find our South African and African clients, generally real estate is either for family usage, second home. It's often linked to that or different is investment. And third is obviously personal use for their children, often through their studies and what they do. So hugely, hugely popular.
Okay, very interesting. I mean, what do you think some of the key concerns are for clients at the moment? What's really the pressing issues that they're, particularly these international families looking across different markets?
I think the one thing, and look, having lived in Joburg for 3.5 years and being 7,000 miles away from most of my own personal wealth, if I can be blunt, it's quite an odd feeling because you really, really need to trust the institution that is holding your money in whatever shape or form, and particularly the individual portfolio manager, private banker who's actually covering you and supporting you. And you know, it gets very interesting because sitting here, you know, you get snippets of news about what's happening in Europe, what's happening in the UK. You try and keep up to date, but you're still a very long way away from those financial centres. So this is where I think having a bank with you who is stable over centuries, independent as an entity, has very good talent, because I mean, most of our bankers have covered Africa for a decade plus. They know what they're doing, and also the product proposition backing that up. So, and look, in terms of trends generally, we see obviously investments are always global exposure. So many clients have their local bank with local exposure, JSE equities, bond, whatever it may be, but then they have their separate portfolio, which is an overseas investment play.
Because that's integral for them to keep their spending power, isn't it? Diversification.
You're right. So it's diversification. You're diversifying your currency. So you're out of rand or Kenyan shilling or whatever it may be. And it's often diversification across asset class. But I think the real important point there is because there are a lot of entities that do asset and wealth management. Let's be clear. I think what really puts us apart is, do you trust your portfolio manager and do you trust your banker? And that's very important. But implicit in that is, do you trust the underlying methodology of how they are building that portfolio and how are they actively managing that portfolio? So for us, in the private bank, we do single line stock investment. So we don't go through funds of funds of funds, keeps fees down for our clients, which are important. But also we look at companies that are very cash generative, low gearing, so in a high interest rate environment, they don't really get that affected. They are market leaders in their particular sector. They often, I've got to be careful around competition, but control the pricing. So they are a very good bellwether of how their pricing is accepted in the market as the right type of standard. Often they're obviously sustainable, so they invest for the future and they look for decades. So our portfolio management is a long-term play. It's a high conviction play. There's about 50 stocks only, because to meet those criteria, you've got to be a top echelon of a type of company. So it's global, cross-sector, 50 plus stocks, and it's for the long term. So, you know, we look at 3, 5, 10 years. And what I always say to clients, it could be the grandfather or the father or the grandmother, whatever it may be, is, you know, yes, we're dealing with you, but I'm actually thinking about your kids and thinking about your grandkids when we're having these conversations. And how do we actually make sure that we are the bank for you across multiple generations, not just on one transaction basis? That's not what we do.
And you've got great people like Hank Potts in-house, and Hank's been on the road with us. We did an event in Nairobi pre-pandemic, and he was great getting out there, talking to people with real expertise. I mean, do you leverage that team to travel, see clients as they wish?
I mean, you know, we've got Hank on the global strategy side. We've got Mark Tucker in terms of wealth advisory. We've got Ben Pocock in terms of real estate. I mean, these are, I would say, sector specialists or area specialists within the private bank. And it is phenomenally powerful because, you know, they live and breathe what's going on in their area. They've got very, very deep expertise. And the conversations I really like actually is because it's called private banking for a reason, because it's private. And 90% of my meetings are at the homes of individuals. You don't meet them in the office, it's private. You're at their home, you're with their husband or their wife, you're with their children, you're having these types of conversations. And what they really want to know, in addition to what's happening geopolitically, is what's my next door neighbour doing? What is the average person like me in South Africa doing? Now, obviously, we don't give names, confidentiality, all that good stuff, but we do give trends. And we can say, look, I've seen this before where you've got, you know, husband, wife, 3 kids, grandparents here, X, Y, and Z. I can almost forward track your next 10 years and give you an indication of what other families are doing, which are further down that curve than you. And I think that's where we provide very, very useful advice. And someone like Mark, particularly, who has lived and breathed the wealth advisory sector for decades, gives very, very coherent, clear and thoughtful advice to clients around how they should set up their affairs. And that's why, we bank, we've got operations in Isle of Man, Jersey, these places. Now, we've chosen them for a reason, because they're very, very stable environments, very long history in terms of financial services, seen as very safe in terms of regulation, etc. So we don't have these challenges of like, are you going to go on a blacklist, or are you going to get into this issue or that issue? I mean, someone told me the other day, we've got so Isle of Man and Jersey, we've been there for 100 years each. I think we're the largest employer and actually largest taxpayer in both the Isle of Man and Jersey. So, we are...
Strength and depth in those jurisdictions.
Exactly, yeah. And it makes sense, right? And it stands the test of time. And that, again, it all comes back to we want to be there for families for the long run.
And on that generational point, I mean, do you make sure that you're recruiting younger bankers still cutting their teeth, but good quality professionals coming through to actually match off against the age range of new clients, or create that relationship so that the 20-year-old doesn't have the 60-year-old banker who's thinking about the golf course, and retirement, someone who's going to be there for their career?
100% correct. Yeah. I mean, look, we work generally, our bankers work in teams. Yeah. Obviously, it's also a way of bringing our young talent up, because the way you learn in this business is, yes, client has a request and you do X and Y and Z in the office, but the real learning is when you're spending time with the client. And we want our younger bankers to see how the older generation of a family operates, as well as the younger generation. But you're right, the kind of team marking of individuals within a family is important, because, again, it's a relationship business. You want to build relationships, right levels in the right way.
And for those younger clients coming through, or younger members of families, I mean, a lot is written about the great wealth transfer, about this wall of capital that is going to be passed on as part of succession planning. I mean, what do you see from that perspective? Do you see these younger clients with different priorities and attitudes, or actually are they facing the same issues and broad, can you characterize a whole sort of swathe of people?
Yeah, I think it is challenging to generalize, and I think the reason it's actually challenging to generalize is actually it's very cultural based as well. Yeah. So you do, particularly in certain African countries, get quite a patriarchal or matriarchal system, and and quite rightly, the grandparents I went through blood, sweat, and tears to build this business. And we've got to a certain level of wealth. And actually, I'm thinking wealth preservation. Yes, there's creation, but actually, there's a mountain of wealth here. I want to preserve it. Whereas, obviously, the younger generation, often educated abroad in the UK, come back, want to prove themselves, have opinions, thoughts, views. Time horizons a lot longer, so they're willing to potentially take more risk. Very much more digital savvy. So, want to maybe explore more of that space where they're parents are nervous because it's more of the unknown.
No, so perhaps into different sectors. They come back from 10 years in the US and want a tech business rather than manufacturing.
Agreed, but I'll give you an example where actually I think it's worked brilliantly, and actually it kind of links into the philanthropy conversation, which is another big issue a big topic that we cover with families is that. So we've got an ultra high net worth family in Durban. Have done very, very well in the education space, and were thinking around, they wanted to give back more and more to the local community. Very, very generous and excellent, lovely client across generations. And they realized that, the old concept of philanthropy where you write a check, you give it to someone, you feel good that you've written the check, and that's about it. The philanthropy has moved on so significantly since then, and now you're looking very much at impact-based philanthropy. And I would almost argue that this family is quite market leading in terms of what they've done. So because of education, and they were passionate about it, they organised and got built a preschool, a primary school, and a secondary school. They then ensured everyone that works for them, their children were at these schools. Okay, not fee paying or anything. You go through, you get educated, and the local community as well getting them involved and getting them to send their children, of course. And from a philanthropy foundation perspective, they ran the school, they got the right teachers in, etc., etc. Now, the real beauty about this is you are now starting to see people who went in at 5 and come out at 18. So here in South Africa, they call it matriculation, or A-levels, etc. Then what does that individual do? They might go to university, they might go and get a job. When they start getting a job, they're earning for their family. And suddenly the entire community is being uplifted because of this impact philanthropy. It's mind-blowing. Now, to go back to your point on next gen, interestingly, when you're coming out of the end of that school, you're also thinking, okay, if I do want to get a job, what jobs are available? What are the kind of jobs that are there? And of course, it then goes into the tech space in some shape or form, which the older members of the family were naturally not really that savvy with. So what the younger members of the family really took as the mantle is they increased more digitalization in the school. So children were used to the iPad, the keyboard, the X, the Y, the Z. So when they came out, they were far more technology savvy generally. And again, made them in a better position to get good jobs within the community. So that's how Next Gen has had a real impact and a positive impact to the family's development through this philanthropic.
Yeah. A great example how philanthropy led to productivity. Education there is the fundamental of human capital.
It's incredible. And if you look at South Africa, education, you want to alleviate unemployment, you want to uplift communities. I mean, this was doing all of that and on a sustainable basis long term. So it's where you have these multiple generational families where families actually buy in to what they want to do, it can really have a massive, a long-term, lasting, sustainable effect on the communities around them. What's interesting though is, even before that, you actually encourage the conversation. And I've done this, I've actually been in the room a few times. Some families like to do it themselves, others almost like me to be in there as a moderator almost, is
as an umpire.
To talk, yeah, exactly. And it can get as rough as rugby, I can tell you. So it's, but just in terms of how, what are their values as a family? What are their moral values? What are their goals? What do they want to achieve as a family? What's their legacy? What do they want to be remembered for? And linked to that is obviously the wider wealth discussion. How is the wealth going to be attributed? Who is managing the wealth? Where's the trust? How's that going to work? If the grandparents or parents pass away, how's that then going to be managed? So the process of having a family charter, letter of wishes, whatever it may be, in fact, the journey is more important than the result, because you really see people being vocal around what is really important to them.
A document is worthless if people don't buy into it.
Agreed. And I often say to parents, don't just blindly, without, particularly obviously if their kids are of a certain age and maturity, I said, don't just write the letter of wishes yourself and keep it in the safe and the executor takes it out. Actually have the conversation with your kids, get them to buy into it, get them to understand it. And they may also contribute it, saying, well, actually, I think this is important to me or that's important to me. So going through that process, and it's odd, because you're talking about X person passing away or Y person. People don't necessarily want to have those conversations, but they are critically important, particularly when it comes to wealth preservation. Critically important. And I think it also gives almost kind of peace of mind to many people because they've had the conversation, and they know where they lie, etc. And it gets things out on the table.
And I guess documenting the way the family made its wealth, the narrative around the family and the values coming together is important for the next generation to come through to understand how that money was made, how difficult it was perhaps,
of course,
what lessons to learn maybe from the past. There's difficult times through every generation, isn't there? There's a lot of learnings.
Yeah, no, you're right. And we held, this is probably about 2 months ago, we held a Next Gen event in Lagos. And I'm sure we'll do one here in SA, but we actually did it where only children were invited, so no parents, and it was quite a honest, frank discussion with the kids, as it were. I mean, when I say kids, some people are 35, 40 years old.
Yeah.
But you get the range. You get the range. Around and you sometimes I think I move from banker to psychiatrist to psychologist, because it's real life. My father or mother was phenomenally successful. There's an expectation for me to be phenomenally successful. Yeah. There is pressure there, and how do I handle that, etc. There's the other end of the spectrum where some children want nothing to do with the business at all, have absolutely no interest. You sometimes get a mix of both. How do you handle that? To add an extra layer of complication into the mix, then when they get married, how does that work? How do you take care of the daughter-in-law or the son-in-law, and how does that kind of work? Because unfortunately divorce does happen in families, and challenges happen. So how do you...
And I guess that point in the family business where the children don't want to be involved, that's at a time when you're discussing, well, actually, is this a good time to sell, to diversify, to do something different? And that moment is never clearly written up as it's always a judgment call, isn't it? And that's where you need wise counsel.
You're spot on. And in terms of, and also it's not necessarily that, yes, they necessarily don't want to take the family business forward. They've got other ideas that they're particularly passionate about, they want to take forward. So what we do there, and we've got an example actually at the moment where business is worth around $1 billion. They're looking to exit a 40% stake. First of all, who's the buyer of that 40% stake? So we, through our global network, will find, so we have a whole collective of global families who are interested in looking at particular investments. It's called our private assets program, which is the other thing that we offer to in our private bank. And often, remember, these companies are all private that actually want to do this, so want to exit a certain position. Interesting sector, and we ask families globally, there's this opportunity. Could be 400 million, it could be 300, it could be, it could be small, it could be 50 million, 75 million. Would you be interested in taking an investment in this company? Some families want to take an even bigger investment, and they'll say, actually, I want a board seat as well. I want to get actually properly involved. So that's the other service we offer to a lot of clients, is we have our global private bank network. Part of their wealth, they look at real estate, particularly the UK, as we've talked about. Part of it is around the classic equity debt investments. We've talked about that in terms of methodology and how we approach that. And then the other part of it is a big trend is entrepreneurs like to invest in entrepreneurs.
Yeah.
So they will often be on the lookout for companies, opportunities, either in the same sector as them because they know their sector, they've done it for generations, or actually a related but diversified play because they want to protect their wealth. They've got all their eggs in one basket. So how do I actually diversify into some strategic investments for other companies that could actually have accelerated growth? We even offer, so that's companies established looking to exit a position, but we also offer through our digital Eagles lab, which is very fintech, and our Barclays accelerator. So again, these are companies, they've probably had seed capital and a couple of series funding, but they're then looking to really transform and accelerate.
And on the private markets piece, I think that is very interesting. And we've seen definitely, certainly in London, multifamily offices really doubling down on that, trying to connect entrepreneurs on deal flow. But obviously they haven't got the scale that a bank such as Barclays has to access, to look at the different opportunities that are available. So it's interesting that clients don't need to look outside the banking sector for this kind of service, and that you're very well placed, to present that. So, I mean, more broadly, what do you see in the family office sector? How do you work with these ultra high net worth, clients in that, who are positioning themselves in that space?
Yeah, so look, they're onboarded as our clients. We onboard them on the relevant platform, and literally we've got to a system now where they can go online and see different opportunities that are coming up. And we've gone from potential investment in a yacht maker. I think there was a Hollywood company a number of months ago. There's fintech, ed tech, med tech, agri tech. So a number of different sectors, different types of companies, focused in different geographies, doing some frankly weird and wonderful things, some pretty amazing things. And again, it's for family offices is we help those companies, first of all, in their incubator environment because they're very focused on their idea. Often what we do there is actually help them be able to pitch their idea to an investor because many of them may not have done it to the level that they need to, or also, do you have the financials to back this up? What assumptions are you making as in your business model? How do you see the projections going forward? What are your main risks? So we almost stress test them to say these are the kind of things that investors are going to ask you, or the family offices before they write you a check are going to ask you, are you prepared for these answers? I mean, I wouldn't go as far as saying Dragon's Den, but it's that kind of thing.
And look at the valuation, is the valuation realistic or fanciful?
Exactly. Do you really think you're $1 billion company? So we help them in that respect. And remember, because they're in an incubator environment, they're around other entrepreneurs. So it's very, we do it in London, we do it in Tel Aviv, Hong Kong, New York, a number of different places. And it's very, very exciting. And clients love it. I mean, family offices love it because they're seeing things that the market does not see at a time at the evolution of a company where it could really accelerate. So, not all companies accelerate, of course, but some do. So if you're looking for that, delta, that extra return, you're willing to take a risk, and it can be a very, very calculated risk, particularly if that particular seed company is in your sector or the area that you know very well. And also what we like is a lot of these multifamily offices that have made their wealth in a particular sector, not only do they help invest, but they also provide expertise. They provide expertise because often the patriarch will say, I was in your position 40 years ago, and this is what happened to me. So you get that mentorship as well, which is very, very powerful. And look, to the extent we can help clients and they can be the sovereigns of countries or the big, big corporates, to the family offices, to Mr. and Mrs., to the young entrepreneur, that's what we're here for.
Fantastic. And that must bring you into contact with a lot of intermediaries in the wealth sector, like the leading tax and legal firms dealing with these international clients, the fiduciary sector. I mean, imagine these are very important partners to you to actually work with together. On the biggest families, it's about getting the right team, isn't it, around the client to make sure they've got sound counsel on any issue they need.
Yeah, look, 100% correct. So I think the needs of the client always come first. We know very well where we add value from a banking, credit, investment expertise perspective, but we also know what we don't do. We don't do legal, we don't do tax, etc. So you're absolutely right. Having the right intermediary around you, the trust company, the private client lawyer, foreign exchange house sometimes for exchange control approval, etc., is absolutely critical. And different families are different. They have slightly different needs in terms of what they potentially may want to do. Trends may be the same, but they all have their nuances. But getting the right team around. And look, I'm a big believer, so obviously my number one priority is want to grow the Africa franchise for Barclays and to make it a huge success. But I'm very cognizant of the fact that one is we can't make the journey alone. So we need good parties around us to help clients. I want those parties to be successful as well. Why not? Yeah, it's a win-win for everyone. So, and you end up, and look, I'm sure it's all over the world, but particularly in Africa, it's a small community of people who focus on the continent and particularly countries within the continent. So building up that trusted relationship around those advisors. So there are many intermediaries. I would say that we are quite focused on a core set across each of the groups because we end up working a lot with them. We have a very deep relationship with them. And look, when we are bringing in the private client lawyer or we're bringing in the tax advisor or whatever it may be, it's kind of partly the Barclays name.
You've got your reputation invested in it.
There's a reputation in there. And what we also do, and this is where Mark Tucker and his team are excellent. I mean, they're all, he heads up wealth advisory. They're a global team. they're all made up of ex-tax specialists, lawyers, etc., etc. So they will often do the initial scoping work with the client around what their needs are, and they will have a very, very good sense of, option A, option B, option C, but then we bring in the relevant expert. And it's again, some of these areas are complex, yeah? So you need people who live and breathe that every day in terms of tax legislation in the UK or whatever it may be, or cross-border considerations. So getting the right expertise around a client is critical. Overlay that with client happens to be a global family in multiple jurisdictions, and then it's like a complete,
all bets are off.
It's not easy. Yeah. It's not easy. It's very rewarding when you get it right and you can help, but it's not easy to structure things, multi-product, multi-location, multi-generation. It's tricky.
Amol, fantastic talking to you today. So interesting to get all that insight. We look forward to sharing this interview, but thank you for taking the time.
David, thank you for your time as well. Really good to see you.
The latest technical content delivered through global conversations with professionals for professionals.